Bismillahirrahmanirrahim. Okay, now we talk about earnings per share. Yeah? I think the term has been very much familiar to your ears. If you happen to check the income statement of the companies, you will notice at the bottom of the income statement one disclosure on earnings per share, yeah? EPS. Yeah? EPS, and then they would have dilutive EPS. Yeah? So basically, earning per share EPS is income that earned for each ordinary share. That's why earning per share. Yeah? So how much the earning or how much the income is supposed to be earned for each ordinary share. Yeah? We only report the earning per share or EPS for ordinary shares. Yeah? We exclude the preference shares because, as we discussed, preference shares has a fixed dividend amount for the preference shares, so it's useless to calculate what earning or income that is supposed to be distributable for the preference shares. Yeah? Okay, if the company has an element of discontinued operations, then they have to disclose earning per share from continuing operation, yeah, and the net income on the face of the income statement. Okay. So, for example, in this illustration, so earning per share, it would split from income from continuing operations and loss from discontinued operations, net of tax. Yeah? So we get the net income. If it doesn't have any discontinued operation, then such disclosure is unnecessary. Yeah? Okay, to calculate earnings per share, there is a different approach for simple capital structure and complex capital structure. When we mention about simple capital structure, it has only ordinary shares and it doesn't have any dilutive securities, or it doesn't have any securities that are possible to be converted into ordinary shares. Yeah? Meanwhile, for complex capital structures, the company has the securities which have a dilutive effect, or the dilutive securities like convertible bonds, convertible preference shares. It has the share warrants, yeah, which have the possible effect to dilute or to reduce the earnings per ordinary share. Yeah? Okay, if it is simple capital structure, then remember earning per share refers to income per ordinary share. That's why we have to remove the element of preference dividends. Yeah. So to calculate earning per shares for simple capital structure, we just take the net income minus the preference dividends, and we divide with weighted average ordinary shares outstanding. Yeah? So we have to calculate the weighted average ordinary shares outstanding because different ordinary shares could be issued at different date. Yeah? So we need to calculate how long it has been outstanding. Yeah? And the preference dividends need to be deducted from the net income, yeah? Whether it has been declared or not, yeah? For the cumulative preference shares. Yeah? So how to calculate the weighted average ordinary shares outstanding? We need to identify how long the ordinary shares have been outstanding. Okay? And when the share dividends or share splits occur, the company needs to restate the share outstanding before the share dividend or split. So means we assume that the share dividend or share split will have an impact even to the number of shares outstanding before the share dividend or share split. Yeah. Okay, in this example, let's say the company on January 1, they have the beginning balance of share outstanding 90,000. April 1st, they issue additional shares. July 1st, they purchase, yeah, treasury shares, 39,000. And then November 1st, they issued another on 60,000 number of shares. So how do we calculate weighted average ordinary shares? We have to identify how long it has been outstanding for each class of shares. Okay. So the first one, January 1st until April 1st, yeah, the beginning balance one, 90,000. It has been outstanding for 3 months. Yeah. So we times with that 3/12 months. Then we get the weighted shares. Yeah? And then we move to the next group. Yeah, on April 1st, now the company has a total of 120,000 shares. Yeah, and from that period until the next transaction, from April 1st until July 1st, it is also 3 months. So 120,000 we multiply with 3/12. Yeah. And on July 1st, now the number of outstanding shares of the company becomes 81,000 because there is a treasury shares of 39,000. Yeah. So we will multiply again by how long it has been outstanding until the end of the period. Yeah. Let's say on December 31st, there is a new issuance of shares. Then because it doesn't have any period outstanding during the year, so we don't include it in the weighted average ordinary shares calculation. Yeah. Because on December 31st, it's already the end of the year. Yeah. Okay, let's say there is a share dividend during the period. Here is where we need to restate the number of shares before the share dividends issuance. Okay, this is the illustration. For example, and on June 1st, it has 50% share dividend. Okay. So how do we calculate the share outstanding? Yeah. We assume the shares that have been outstanding from the beginning of the year until the date of share dividend needs to be restated, yeah, to reflect the total amount of share dividends. Mean that amount of share dividends is also assumed to be already outstanding since the beginning of the period. Yeah? That's why you see here there is a restatement of 1.5. 1.5 means for every 1 shares, the existing shareholder will receive a 0.5 additional shares. Yeah? That's why restatement is 1.5. Yeah? So the previous outstanding shares needs to be multiplied by the restatement and then the fraction of the year, yeah? How long it has been outstanding. This case is 2 months over 12 months. That's how we get 25,000. Yeah? And the share dividend is on June 1st. Yeah? On June 1st forward, yeah, there is no need to restate anymore. It's only for the previous outstanding shares that we do the restatement. Yeah. Okay, this similar example. Let's say the company offers the share split. Yeah, 3 for 1. Yeah, on July 1st, 300,000 additional shares because of share split. Yeah. So we need to do the restatement for the previous shares outstanding. So restatement is 3 because 3 for 1. Yeah? We multiply with 3 because we assume that share split also become the total outstanding shares from the beginning of the year. So we get the weighted average ordinary shares outstanding. Okay. Then how do we calculate the earnings per share? Then we take the income. If it has the discontinued operation, then we need to split between the continuing operation and the discontinued operation. So we can get income available for ordinary shareholders. Yeah. So we get earning per share differently for discontinued operation and continued operation. In this case, it's a gain, not a loss. And we get the income available for ordinary shareholders. Yeah? Okay, the per share amount for gain on discontinued operation or loss, it needs to be disclosed on the income statement or in the notes to the financial statement. Okay. Now we talk about complex capital structure when the company has dilutive securities element, such as convertible securities, options, warrants, yeah, share rights, etc., which when they exercise these convertible securities or when they exercise the share option, it will have the effect to dilute the earnings per share, to reduce the earnings per share. Yeah? So the company would report the basic EPS and the diluted earnings per share. Yeah? So how do we calculate the diluted EPS? Yeah? We need to consider the impact of convertible securities. Yeah? So basic EPS, it only consists net income minus preference shares and we divide with weighted average shares outstanding. Yeah? But diluted EPS, we need to see the impact of convertible securities. We need also to consider the impact of options and warrants. Yeah? Okay, so we calculate the dilutive effect of potential conversion on EPS using the if converted method. Means we assume that if those securities are converted, then what is the amount of diluted EPS? Yeah? Okay, for a convertible bond, it assumes that conversion at the beginning of the period or the time of issuance of the security if issued during the period. Yeah? And we need to eliminate the related interest net of tax, yeah, from the income amount. So basically, we remove all the effect from the dilutive securities. Yeah? Okay, for example, the net income of this company is 210,000. A weighted average number of daily shares outstanding is 100,000 shares. Basic earning per share is 2.1 because 210,000 divided by 100,000, yeah, number of shares. There is an error here. This is not 4, it's supposed to be divided. Yeah? The company has two convertible debenture bond. One is 6% issue sold at 100 in a prior year, convertible into 20,000 ordinary shares. Interest expense for the current year related to liability component of this convertible bond is 60,000. The other is 7% issue sold at 100 on April 1st of the current year and convertible into 32,000 ordinary shares. Interest expense for the current year related to liability is 80,000. So there are two convertible bonds. Okay, one the interest is 62,000. The second one the interest is 80,000, and we need to consider the tax rate to identify net tax amount of interest revenue. Or interest expense. Okay. So net income, this is basic EPS. You just take net income minus preference dividend, if any, and we divide with weighted average shares because there is no information on the preference dividend. So we don't need to minus the preference dividend. So we get the basic EPS of 2.1. Yeah. So when we calculate diluted EPS, we start from the basic EPS. Yeah. So 210,000 the income, and then we need to add back the net tax amount of interest for the convertible securities. Okay. So the net tax income for the first convertible bond is 62,000 multiplied by 1 minus 0.4 because 40% is the tax rate. Okay. And we need to add the number of convertible ordinary shares. Remember, the first bond can be converted into 20,000 ordinary shares. Yeah. So we assume if the bond is converted into ordinary shares. Yeah. So the effect on the diluted EPS if the 6% bond is converted into ordinary shares with the EPS now become 1.86. So you can see there is a dilutive effect, yeah, from 2.1 to 1.86. So the EPS has been reduced. Yeah? And next, we again calculate the effect of dilutive effect of the second bond that we have, yeah, which is 7% debentures. We take again the interest on bond for the second bond, which is 80,000, and we calculate the tax amount. And we have to consider how many months it has been outstanding, yeah, the bond, because it was issued during the period for 9 months. Yeah. And again, on the bottom, the weighted average number of ordinary shares we have to add if the bond is converted into ordinary shares. The second bond can be converted into 24,000 ordinary shares. Yeah? So we get the further effect on EPS. It has further reduced into 1.5. Yeah? Okay, why in dilutive EPS we need to add back the net tax interest amount? Because this income, if we assume that the bonds are converted into ordinary shares, so that means those interest payments are no longer need to be done. Yeah? So the company doesn't need to pay any more interest because it has been converted into ordinary shares. And when we assume that the company do not need to pay the interest, means we have to add back to the income amount. Okay. So the total diluted EPS, if we total the whole, it becomes 1.97. Yeah? Okay, if the conversion rate on dilutive securities may change during the period in which the security is outstanding, in this situation, the company used the most dilutive conversion rate available. So we must always take the approach of the worst possible scenario. For convertible preference shares, the company does not subtract preference dividend because when we assume that the preference shares are converted to ordinary shares, mean there is no more preference dividends needs to be paid. Yeah. Okay, let's see this example. The company issued 1,000 of 6% convertible preference shares. Each 100 preference shares is convertible into 5 ordinary shares. The net income is 240,000. Tax rate was 40%. The company had 100,000 ordinary shares outstanding throughout 2019. So how do we calculate the diluted EPS? Let's see the basic EPS first. We take net income minus preference dividend and we divide with the weighted average number of ordinary shares outstanding, which is 100,000. So we get the basic EPS 1.8. Yeah? When we calculate diluted EPS, so we assume that 60,000 preference dividend now is no longer need to be paid because we assume that the preference shares to be converted into ordinary shares. So that's why we add back in this calculation. And then the weighted average number of shares outstanding, we need to add with the number of convertible shares, which is 50,000. Yeah? So we get effect on EPS 1.2. And the total EPS is 1.6. So basically is diluted, reduce the value of EPS from 1.8 to 1.6. Yeah? Okay, you can try. Okay, there is sometimes the effect is non-dilutive, yeah? Anti-dilutive. It doesn't reduce the value of EPS. If it doesn't reduce the value of EPS, then we don't need to provide the diluted EPS. In this example, it is anti-dilutive because the basic EPS and the effect on EPS, it doesn't reduce the value of EPS. So this is basically anti-dilutive. Yeah? And the basic EPS is equal to the diluted EPS. Yeah? Okay, for the case of options and warrants, we measure the dilutive effect of potential conversion using the treasury share method. Yeah? Under this method, we assume that the company exercised the options or warrants at the beginning of the year or date of issue, if later. Yeah? And that it used those proceeds to purchase ordinary shares for the treasury. Okay, let's say the company has a net income of 220,000. Average number of shares outstanding for the period is 100,000 shares. So basic EPS is 2.2. 220,000 divided by 100,000. And the average number of shares related to option outstanding, although it has not been exercised yet, and an option price of 20 per share is 5,000 shares. The average market price of the ordinary shares during the year was $28. So how do we calculate the diluted EPS using the treasury share method? Okay, so average number of shares related to options, the share option just now was 5,000, and the price for that option is $20. So the proceeds that will be received by the company when they exercise the options is 100,000. Yeah? And we compare with average market price is $28. Yeah. So treasury shares that could be repurchased with proceed is 100,000 divided by $28, which is 3,571. Yeah? And excess of shares under option over the treasury shares that could be repurchased, yeah, potential ordinary incremental shares, is the total number of shares related to option outstanding, 5,000, minus the treasury shares that could be repurchased, 3,571. Yeah? So average number of ordinary shares outstanding is 100,000. Then we add with the total number of ordinary shares, potential ordinary shares of 1,429. Yeah? So when we calculate the diluted EPS, the total average ordinary shares outstanding is 101,429. Yeah? So we get the diluted EPS of 2.17. Okay, another issues for diluted EPS, contingently issuable shares, ordinary shares issuable for little or no cash consideration upon satisfaction of specified condition in a contingent share agreement. Yeah? When we say contingent, it has not happened yet, but it can result in the future transaction. Yeah? But it needs to be disclosed. Yeah? And then anti-dilutive. Okay, so basically what do we present and disclose for EPS? The company needs to disclose the EPS for income from continuing operation, discontinued operation, as well as the net income available for ordinary shareholders, as we have mentioned previously. Okay, there is an option whether it is presented on the income statement or in the notes to the financial statement. So this is basically how the company presents the EPS on its income statement. Yeah? Okay, it can be in the income statement or it can be in the notes to the financial statement. Yeah? The separation between the EPS from continuing operation and the gain or loss from discontinued operation. Okay, so this is the summary that you can go through by yourself. I hope you read thoroughly, yeah, comprehensively on the topic because it's quite complex in nature. Yeah. It gets more complicated in nature. That's why you need to pay more time and attention in understanding the subject. Okay, I wish you all the best. See you again. Assalamualaikum warahmatullahi wabarakatuh.